All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Market kicking off here this morning. We saw S&P futures around 3,000 earlier this morning, and they've pulled on back here a little bit here so far. But this is a 15-minute chart of S&P futures. You can see this 3,000 level. We've been bouncing a little higher, a little lower between it, for weeks now, almost a month. Just sitting around, hanging around at this level. Is there a little head and shoulders pattern starting to form? Yep, there is, but head and shoulders patterns need confirmation. And even then, with confirmation, they're only about 65% accurate. So, for whatever that's worth. But we saw S&P futures pretty much climb higher once the European session started last night, and we had some of the political stuff in the UK, and then we see the markets open, and they've pretty much been selling off here since the open, but it's very sectoral. Right, it is absolute sectoral movement out there. Stocks like Win, which were down yesterday, trading on higher today. We have a lot of mixed bags out there in the market today, and not too surprising, right? This is the environment that we have been in, and it's the environment that I continue to expect, here going forward. Now we are seeing gold. Let me show it to you here. We're seeing the U.S. dollar hit a new high. U.S. dollar hitting a new short-term high here, pushing on up. We also see bonds pulling on back. And, that combo, what's going to lead the market on a day when that happens? Well, it's going to be the banks that lead the market on a day where dollar up and bonds down, because interest rates go higher. It's just a better recipe for banks. And so we see banks outperforming this morning. If we come in and we look at kind of the other sectors and how they're moving, so far this morning, materials are up, which is unusual with the dollar higher, right? Consumer staples, Coca-Cola earnings, definitely helping that. Industrials. And then we have communications lagging, utilities lagging, real estate, healthcare, all lagging. Kind of the safety sectors lagging here this morning. And, some of that's due to, kind of the agreement to raise the debt ceiling and all of that here in the U.S. Again, nothing game-changing. Nothing where we look and go, oh, well, now this market is very different because of X, Y, and Z. And, we didn't have that yesterday. We didn't have that last week. We didn't have it the week before. And, I don't expect that we will have it this week. And, I know that's irritating for, a lot of people. They want to see, change all the time. But this isn't a market with a lot of constant change in it. Yes, prices move, but we're not talking about a big change in a lot of the stories that are going on out there. Okay. All right. Let's go take a look at the challenge. New spreadsheet link has been put into the message center. All the updates will be on that. The old one will work, but if you want to see the updates, they will only be on this new one here. We have Bank of America on the board. Let's go fill in the option value here. Let's see where that's at this morning. $1.36 on it. Let's see here. Bank of America up about, 50 cents? Yeah, so about $1.36. It takes challenge gains up over 13,000 for the first time, so hitting a new little high there. And challenge value up over 16 grand here. It's absolutely been a slog here in the month of July. We've tracked gains. We've put on gains, a few thousand in gains, but it has absolutely been a chop environment. And this, I'll continue to go back to this survive the chop and thrive in the trend, and we continue to survive in the chop, right? And that's what we're doing in here, surviving in the chop. Now, no decision to be made on Bank of America. Auto exit date is tomorrow afternoon for green, yesterday afternoon for red. Now, I got a question come in last night, and it was a very good question. About the difference between Target and Bank of America. And the question said, well, Jeff, you decided to sell Target on Friday, and you decided to sell Bank or hold Bank of America, Monday. Why not hold Target on Friday? What's the difference between the two of them, and the decision process that was made? And a really good question, and it all comes down to the auto exit dates. And these auto exit dates were one of the more difficult parts of the algorithm to put together, right? It's pretty easy to find a trigger system, right? And to run with a trigger system. And that's just not hard to do. There are a million of them out there. It's what every stock picker website does. It just has, these trigger mechanisms, and boom, right? But what's very difficult is running with stops. And that's why most people are just very arbitrary with it. But we wanted stop levels that made sense. We wanted stop tendencies that made sense with the probabilities and the numbers, right? And so we kind of put in this auto exit date, and it wasn't really all that effective. There were some where it would stop out and the stock would go our way, and some where it's keep us in or stop us out and the stock would go against us. We weren't seeing a big pattern there, so we decided to kind of split it up and kind of see how that played out. And it really was effective, and I was kind of surprised. I wasn't expecting it to be, but it was really effective. And we've seen it be effective during the challenge here so far. And, there's just two big differences. The auto exit date red is 2 days prior to the auto exit date green. So what does this mean? Well, if the stock's going our way, we can be a little more patient with it, right? It's working, it's just kind of slow, right? And a lot of times that's due to the market or something of that nature. The auto exit date red is, hey, come on, this isn't working. 3 days in, it's not even showing signs of working. Time to go, right? Just time to go. And, the nature of this is not to kind of look and go, oh, well, you know what, the option value is minus $100 or up $100 or something like that. The nature of this is to really kind of understand, is the trade working and breaking parameters, or is the trade, just kind of just holding on there and waiting to go. Okay, that's where the auto exit red kind of comes in, and there's a difference between the two, and there's not a great statistical difference when it comes to looking at the trades where after 3 days they're just kind of flat, and I know my definition of flat and other people's definitions of flat are very different, but yesterday Target Bank of America very flat relative to where we got in, right? And so we're in this kind of flat area, and there's no real statistical change with that. When we are seeing the stock, against us, when we're seeing it pull on back, and it be kind of half an ATR or a quarter of an ATR away, then yeah, the probabilities change, right? So I have no problem, and we've done it 4 times now in this challenge. We did it with Target, we did it with Bank of America. I believe we did it with who else? I can't remember, but we did it with one other or 2 others here, where we hit our auto exit date red. And yes, our option was slightly red, but our stock price was pretty much right where we entered, and so we held, right? And it didn't pay off for Chevron. Chevron was one of them. It didn't pay off for Chevron, but it paid off a little for Target and Bank of America. Okay, and so there's a little bit of gray area in there, and like you hear me say a lot of times, it's not going to make or break the challenge, in this area to say, well, I'm going to hold Bank of America or I'm going to hold Target. Right? It's just not going to make or break things. Yeah, it could help things slightly or hurt things slightly, sure, but it's not going to make or break it. When it comes to this auto exit date green, though, it's a different story. This is 5 days after entry. And what we see in the data is that if after 5 days we have not had a significant move, the chances of a significant move happening are just diminished big time. Doesn't mean it can't happen. Doesn't mean it's not going to happen. Doesn't mean it has to reverse. Doesn't mean, it doesn't say what it has to do. It's just in the data, we notice that, hey, there is a big difference here on that 5-day mark. Not 4-day mark, not 6-day mark, on this 5-day mark, where, you know what, after 5 days, it just can get a little ugly. And so it's one where it's not overwhelming. It's not something where, we look at and go, well, we just have to be out after 5 days or it's just a disaster. No, in fact, a lot of them after 5 days, they continue to go, right? They do continue to go, but the probabilities change. Right, and the risk-reward factors change, and change in a big way. And we also want to keep the challenge kind of fresh and moving and trading, getting in. And, I don't want to be holding something for 40 days, right? Nobody enjoys that. And so, want to be kind of cycling through. So there's a big difference between this auto exit date red and being able to say, hey, it's right there. The principles are intact. I'm going to hold it. And auto exit green. And yes, Target had a slight gain on Friday. And yeah, we could have held it. But the data suggests, no, you got to go. And so you're not going to see me kind of hold things past this auto exit date very often. Maybe if we've had just almost a 2 ATR move, but not quite, or we've had an 2 ATR move and it just pulled back just slightly to where we haven't pulled any off, and the trade's working. Yeah, there's a situation where we could do it, but in most situations, no way, right? Gotta go. I gotta go. I have to leave and move on and just continue to play the probabilities, which is what this challenge is about, which is what the challenges, will continue to be about, and not my opinions, not my thought, not my hope, not any of that, just simple, pure probabilities. And, that's why Target was exited on Friday. Yeah, you know what? Was I bullish? Did I want to hold it? I absolutely wanted to hold Target. But you know what? There is something, and I continue to kind of talk about it in office here. The algorithm continues to prove that it's smarter than I am. And we continue to see that play out. And I expect to continue to see that play out. Am I competing against the algorithm on my own? I am. Is the algorithm beating me? It is. We both have gains, but the algorithm's beating me. And, I expect that it will continue to beat me. I will have some times where I outperform the algorithm here and there. But overall, there's just so many upsides to bringing the challenge into this format. And, that's the difference there with the auto exit red, auto exit green. Just the probabilities there. And so, yep, little gray area can hold. But once we hit this auto exit date, we haven't moved the two average true ranges, the odds just change, and they change dramatically. And they just change to the point where I have to move on and have to go. Okay? Alrighty. Great. I want to run through the watch list here with you because we haven't had any new signals. We don't have any new signals on the board here this morning. JD is getting, could trigger here today, but, this is one that triggered right back here. And, it had a couple-day rally. It's kind of gone into this consolidation phase. We saw a 3-7 crossover on Friday, but, consolidation number was too high. Right now, the consolidation number is too high here for it. But, let's go through the watch list. I'll show you some of the stocks, kind of where they're sitting. Are they close to making any sort of signal? And you're going to see a pattern, right? And the pattern is going to look like this, like Alcoa. A lot of stocks are kind of just in this marking time, flat, consolidating area. American Airlines, same type of thing. Yeah, had a downside 3-7 crossover. We're not seeing a big downside trend emerge, here with it. Apple, this is one that just hasn't had a 3-7 crossover to the upside come in here to even be able to go trade it. And we have quite a few of those. But Amazon just kind of in that chop and wash, and a lot of these they have earnings upcoming. Arconic's just been in this slow bleed, just very slow bleed here on it, but pretty flat. Boeing has had some news and whatnot that has helped kind of propel it up or down. We did not get a buy signal on this 3-7 crossover right down here. I was kind of hoping we would, but we didn't, so wasn't able to play that. But nowhere close to a 3-7 crossover. BABA, nowhere close to a 3-7 crossover. Bank of America, we have, right, and we're in Bank of America. Nice little breakout here today. Hopefully that holds and piles on some more gains there. Bristol Myers, this has just been absolutely taken to the cleaners here. This is one that had the big downside 3-7 cross, but it happened on a day where the stock moved more than 2 average true ranges and to make the signal, so it didn't create a signal. Caterpillar been just kind of stuck here at 136 for the last while. Had 2 explosive up days, had 2 down days, and other than that, just kind of been sitting, ahead of its earnings, which are coming this week. Chipotle, which had the 3-7 downside crossover last week, has been bleeding. It wasn't a bear signal, but it's been bleeding. Haven't had anything, really to trade there. Conoco, flat as a pancake here. CSX, we saw the earnings on that. We talked about that. Kind of a disaster there. Chevron, this is one where we had a bull signal come in. We played it. We're knocked out on the time stop. It pulled back a little. It's just kind of been drifting up here ahead of its earnings, but nothing really there. Delta, nothing really there. Here's Triple D, which is pretty much going off the challenge watch list because it's just not tradable. Here's Disney, and I get commented a lot about Disney, but there's no upside 3-7 action here on it. We had the nice downside. That's what we need to see a pullback that's ultimately going to be buyable. And we have a lot of those out there, right? Schlumberger, which had earnings, EOG, which hasn't had earnings, but is kind of in that same boat as Schlumberger. In fact, the chart looks the same. Facebook with earnings upcoming here this week. But FCX, which never gave any kind of trigger in here. The consolidation risk was just too high on it, but has broken out there to the upside in a nice little fashion, but nowhere close to a signal. FedEx, same thing. But bottom line, we haven't had a lot of signals. And as I go through and I look at potential signals, there's not a lot of potential except for on some of these stocks that have pulled back, like a Home Depot. We get that next 3-7 crossover to the upside. Could potentially give a signal. Honeywell, potential, but isn't quite there. IBM is going to take a little while for it to reset here. It's something where at the downside cross, we get a downside cross. It's not going to trigger bearish because it's coming off a new high. And so we kind of need a little downside cross and upside action to give a bull signal, or downside cross and then upside action with a lower high to give a bear signal. So we're days away, maybe weeks away from a possible signal there. We have Intel, which we traded. We hit the 2 average true range. We're able to take some, then kind of got bumped out on this little dip here. And, it's continued to move on nicely, but nowhere close to setting a signal here for it. JD, which I mentioned, could signal here today. We'll see what the consolidation risk is. J&J just has been a train wreck here with the government going after them and then their earnings. It's just not investable right here unless you're looking very, very long term. And we don't have any trade signals on it here as well. Juniper, which has just been caught in the consolidation wash almost this entire challenge. And then JP Morgan breaking out here today, like Bank of America, but not a fresh 3-7 crossover there. Coca-Cola earnings this morning. Very good earnings, really good earnings, and really helping to lift the entire sector there with Coca-Cola. Vegas Sands just kind of just caught in the wash, not going anywhere. MGM, same thing. We have Triple M here. This has been kind of a disaster. We've had the big pullback. We now have a higher low that's come in on Triple M, and there was some pretty good volume in this buy-up that happened mid-July, pushing into a new short-term high. We talked ahead of earnings. We could see this thing run just a little bit to try to get back to some of these pre-earnings or post-earnings levels from last quarter, especially as this quarter is going to be a very much a show-me quarter, but no signal there. Altria, nothing. It's just there's not a lot that I look at and go, wow, there's a great chance that this sets a signal real soon. Microsoft, had a 3-7 crossover yesterday, did not trigger there, so I kind of more expect consolidation. Micron nowhere close to any kind of trigger. Netflix had earnings, going to take a while to sort those earnings out and get fresh triggers, kind of come into play. Things like Nike, right? Finally, you've had a nice little pullback. That next little upside cross could trigger bullish. Would love to see that. Would love to get back into Nike. Pepsi, could potentially do the same thing. Procter and Gamble, nowhere close to anything there. Raytheon, which is off the watch list. And then, so we come down. There's the market. Here's AT&T, which is we talked about yesterday. Just nowhere close to giving any sort of signal there with it. Target, which we traded on this last up, pretty much since we got out, it's been all downhill for it. But it's something on the next 3-7 crossover to the upside could easily trigger bullish. It's not going to trigger bearish on a downside 3-7 cross because it's trading near highs. So we're not going to get bear signals with stocks at highs. Twilio just kind of caught in the wash here. Chunking along there. Twitter, same thing, earnings this week. But here's Under Armour. We get that next 3-7 cross, it could trigger. So you look at Nike, you look at Target, you look at Under Armour. If they get some buy action come in, they could trigger to the upside. But there's just not a whole lot. There's just not a whole lot in things right here and in the charts to where you go, oh, wow, okay, this is really close to a signal or something of that nature. Valero had a 3-7 crossover on Friday. I thought it had a chance of triggering, and it didn't. But Vulcan Materials pulling on back here, but nowhere close to a bear signal. And then Verizon, which has pulled back pretty sharply here. This is one that if this is the pullback zone and it starts to rally from here, that next 3-7 cross would be bullish. But we have seen 3-7 cross after 3-7 cross and just chop, 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 chop. It's finally had some news to drive it at least 3 days in one direction. And I would not be surprised to see a snapback come in there. Something tradable. Walgreens, just nothing. Whirlpool earnings this morning, which earnings weren't bad. Price action, though, from the earnings has been pretty terrible, but I haven't gone through the conference call and stuff like that. Walmart finally getting a pullback, like Target, Under Armour, Nike, those things. U.S. Steel had 3-7 crossover earlier this month, but didn't trigger bullish. It's continued to kind of push on higher, but nowhere close to a signal there. So you kind of see what it looks like. It's pretty dry, and it's one of those where if I sell my Bank of America, yesterday afternoon, I'm in all cash and not a lot of trade prospects ahead, and so it's something where. Did that come into play with holding Bank of America? Sure, but also the individual odds here, with the stock and with where it's sat relative to the time stops. So that's kind of where things are shaping up. It's not too unusual. We've seen this before. This is now the third time this challenge where I've gone through the watch list and just kind of said, man, it is dry, and the potential isn't all that great in the ultra short term here for the watch list. And it's not going to be the last time this challenge that happens either, but it's also, something where we can see things change. And when they do, we react to them and go with them and, trade them, right along here with the challenge parameters. Okay. All right, so Bank of America helping to push the challenge to a new high here so far. So nice to see. And we'll take a look at where things shape up here this afternoon, and any adjustments we have to make, or any new signals that would trigger a trade entry. Have yourselves a fantastic day. We'll talk to you this afternoon. Take care.